Hello everyone, my name is Tony and today this video is about teaching you guys how to calculate your lot sizes, because trust me, a lot of traders do not actually know how to calculate their lot sizes. I know it's very shocking and very sad, but this is like one of the most basic things you should learn first before learning every other thing in regards to trading. Because if you don't know how to calculate your lot sizes, your risk management is going to be trash. You would never know how much you're risking per trade, and sometimes you can end up over leveraging your accounts, risking more than you intended to risk, simply because you don't know how to calculate your lot sizes in accordance to how many pips your stop loss is. Now, there are different categories of pairs that we trade. We trade if it's in Forex, we trade commodities, we have crypto, we have the normal JPY pairs, then we have the USD pairs. With the commodities, I'm talking about the gold, the silver, the US oil. And then for the JPY pairs, I'm talking about the GBP JPY, the USD JPY, the Euro JPY, the AUD JPY. They're all under JPY pairs. Then for the USD pairs, I'm talking about the GBP USD, Euro USD, AUD USD. Then for the crypto pairs, I'm talking about the BTC USD, Ethereum, and the rest that you trade on MT5 and on your brokers. So I'm going to tell you guys how to calculate your lot sizes in accordance to how many pips stop loss you're risking. So every pair has their unit of measurement. Well, mostly JPY pairs and gold and Euro USD and the AUD USD, they have their units of measurement. The JPY pairs, both GBP JPY, Euro JPY, AUD JPY, they all have a unit of measurement of 6.62. Now, it may differ with your broker, but there's like really not much difference. Even in the next 10 years, they're basically almost the same. I wouldn't really know extensively, but I've been trading since 2023 and it's always maintained around 6.64, 6.62, but you can just keep it at 6.62 for JPY pairs. So for GBP JPY, USD JPY, AUD JPY, Euro JPY, 6.62. So the formula we use in calculating our lot size is basically the risk amount, the amount you are risking in USD divided by the unit of measurement, then divided by your stop loss in pips. So for example, this particular trade, the stop loss in pips is 13.7 pips stop loss. Then the unit of measurement of this pair is GBP JPY, so it's obviously 6.62. So what it means is that if I'm risking $1,000 on this trade, how to find the lot size would be to do $1,000, that's your risk in USD, divided by the unit of measurement, which is 6.62, then divided by what? Your stop loss in pips, which is 13.7. What you would get is 11.02 lot size. It means that if you use 11.02 lot size and you take this particular trade and your stop loss of 13.7 pips hits, you're losing exactly $1,000. And how to know that you're correct is, this is a 1:what? 1:6.37 RR trade, meaning that if you risk $1,000, you're making $6,370. That's what you're estimated to make. So if you want to know if it's correct, our lot size is already 11.02. So it means that if we do 11.02 times this unit of measurement, which is 6.62, our take profit here in pips is 87.3 times 87.3. It will give you 6,368, basically approximated to 3,000 to 6,370, which is the 1:6.3 RR trade. So JPY pairs, you calculate the unit of measurement is 6.62, but the lot size formula is your risk amount in USD, which is $100, $1,000, $500, divided by the unit of measurement, which is 6.62, then divided by your stop loss in pips. If you are risking $1,000 and the stop loss for this trade was 30 pips stop loss, it will be $1,000 divided by 6.62 divided by what? 30 pips stop loss, which will give you 5 lot size. So whichever amount of money you are risking, if it's $1,000, you'll do $1,000 divided by the unit of measurement of all JPY. So even if it's AUD JPY, it's the same process. Euro JPY, same process. USD JPY, same process. Whichever amount of money you are risking, you divide it by 6.62, then you divide it by the stop loss pips, the stop loss amount in pips. That's how you get the lot size. So whatever it gives you is the lot size you should use for that particular trade. So that is it for JPY pairs. I'm using GBP JPY for example, but it's the same across all other JPY pairs. Now, after we are done with JPY pairs, the other category I want to look at is the USD pairs, like the GBP USD, the Euro USD, the AUD USD. I will only use GBP USD for this example, but it's the same with other USD pairs. So if you are using GBP USD, the unit of measurement of GBP USD and all these other USD pairs like AUD USD, Euro USD is 10. It's all fixed as 10. So what it means is that for this trade, the stop loss here is 11.4 pips stop loss, and TP is 90.2 pips TP. So how do you know how much you're risking? So the same thing, the lot size calculation is what? The amount in USD divided by the unit of measurement divided by your stop loss in pips. So if you're risking $1,000 and the unit of measurement of USD pairs like Euro USD, GBP USD, AD USD is 10, you will do $1,000, the amount you're risking in USD divided by that 10, then you divide it by what? Your stop loss in pips for that USD pair, which is in this particular case is 11.4. So 11.4, it will give us 8.77 lot size. So it means that if you should use 8.77 lot size and you are trading GBP USD and your stop loss you hit, a stop loss of 11.4 stop loss pips you hit, you're losing exactly $1,000. And how to know you're correct? If you do 8.77 lot size times that unit of measurement, which is 10, if you now multiply it by your stop loss in pips, which is 11.4, you will get exactly $1,000, meaning that $1,000 is your risk. And how to know you're still correct with the take profit level? If you do that 8.77 lot size multiplied by your unit of measurement of 10, if you multiply with this take profit level, which is 90.2 pips, you will get exactly 7,910 USD, and this is what 7.91 RR trade, meaning as I risked $1,000, my TP is expected to be worth $7,910. So this is the same with AUD USD, GBP USD, Euro USD. What you just do is what the unit of measurement is 10. So any amount of USD you are risking, be it $100, $500, $50, $10, $1,000, $10,000, you just have to do that amount in USD divided by what? The unit of measurement, which is always fixed at 10, then divided by the stop loss in pips. Whichever amount it gives you is the lot size you should be using. It means that if that stop loss pips hits with the amount you got after this calculation, you're losing exactly that how much you preconceived to lose. So this way you don't over leverage your account. You always know how much you're risking per every trade you are getting into. So this is it for GBP USD, the USD pairs like AUD USD, GBP USD, Euro USD, the rest. Now we're going into gold, commodities, same thing as every other distinct commodities, gold, US oil, silver, and the rest. How you calculate the lot size? Simple. Now, you already know that with commodities, they don't keep their pip measurement as other pairs. Like other pairs, if you see, like for example, this stop loss here is 3.58. This is not how many pip stop loss it is. In gold and the rest, they keep their stop losses. Their stop losses are always less than, I don't know, I don't really know what to say or what to call it, but like it's the amount displayed is not really what the stop loss is. For you to get the actual stop loss in pips, you have to multiply them by 10. So if you say this says 3.58, you have to multiply it by 10. That means that the stop loss in pips for this trade is what? 35.8 pips. And for the take profit level, he says 40.05. This is not the pip count for this take profit. If you want to know the actual pip count, you do 40.05 multiplied by 10. That is 400.5 pips TP. So that's how you get the actual pip count, the take profit level, or the stop loss level. The actual pip count, whatever is being displayed here, you multiply it by 10. So how you now calculate the lot size for gold and other commodities like silver, the US oil, what you do is the actual pip count you have, because the actual pip count is gotten by the pip that's been displayed here multiplied by 10. So once you get it, how you calculate your lot size for that trade is whichever amount you want to risk. The same process. If it's $1,000, you do $1,000 divided by what? The unit of measurement for gold and the rest is still 10. So you do $1,000 divided by 10. Then you divide it by the actual pip count that you get by multiplying the pip number displayed here multiply by 10. So if it's 3.58, you do 3.58 multiplied by 10, that is 35.8 pips stop loss. So the amount you're risking is what? You're risking $1,000 divided by 10, then divided by, divided by 35.8 pips stop loss, which would give you 2.79 lot size. So what it means is that if you're risking $1,000 for this stop loss here, 35.8 pips, your lot size will be 2.79. It means that if you use 2.79 lot size and you multiply it by 10, multiply it by this 35.8, you're getting exactly $1,000, meaning that $1,000 is the risk here. And this is a 1:11.19 risk to reward ratio trade, meaning that the lot size I use, if I ever multiply it by 10 and multiply it by this TP count, I'm supposed to get $11,000 based on the RR. So if I use 2.79 lot size multiplied by 10 multiplied by 400, this is 40 pip count, but 40 times 10 will give you the actual pip count for gold and other commodities. If I do now the 2.79 lot size multiplied by 10, now multiplied by what? 400.5, it will give me what? $11,000, meaning that this is correct because it's a 1:11 risk to reward ratios trade. Hope you guys are understanding what I'm saying though.